Hi everyone, welcome to my YouTube channel. My name is Tabitha. If you're new to this channel, welcome and please subscribe for more videos. Today we are going to talk about dividend. So dividend, what is dividend? Before we get to dividend, let's discuss how this dividend come from. So public companies, when they do business, they always wish to bring profit home, or the main goal is to bring profit. Some companies can operate on loss, but majority of companies work hard to get profit. So these public companies or private companies, they can either be service or product oriented. They are companies that participate in service industries like banks. They give banking services to their client and then later on make profit from the business activities. Others companies like Walmart, Target, and maybe food industries like McDonald's, they provide physical products to clients and then they make their profit from doing that business activity. Companies can either make net income or net loss. So once they get their earnings from their business activities, they can now subtract the expenses and whatever that is left with them is called net income or net loss. So if a company has a net income, their managers will now come together and discuss how this money will be used. Some companies like tech industries, those that see themselves growing and growing, they will decide to reinvest most of their profit. Even other small startup companies that see that it's even better for us to reinvest some of our money so we can grow and be bigger. So when these managers come together and then they will have a end goal later by deciding what they will do with the money. So like I've said before, some companies will invest the income back to their company and grow even more bigger. So tech industries can like promise their investors that instead of them giving them the money, they will invest the money and promise to give a huge return back to their investors. The small companies will decide to invest in themselves so they can grow bigger. Other companies will decide to buy back some of their own shares to reduce public ownership of their company. And other companies will decide some percentage of that income be given back to the shareholders who who own the shares of the company. So that percentage that is paid to shareholders is what we call dividend. So basically, dividend is the sum of money given to a shareholder. So for companies, it varies from one company to the other. Others they all have different percentages. Others have like 2%, others will even have like 3%, 5%, 6%. So it varies from company to a company. So this dividend can either be paid in cash or in stocks. So some companies and majority of companies, they do pay dividend in cash. Other few companies do distribute some of their stock to their shareholders, and then now the shareholders can now sell it back to the public and get cash if they want cash, or just keep it Yeah. So let's look at payment frequencies. So for this one, it varies from company to company too. Others can do monthly. These are like mostly those companies that are involved in real estate. Other companies that do quarterly are like financial, energy, and utilities. Other companies do semi-annually, every 6 months, or even some companies do annually, which means after 6 months, that's when you get the whole year annual dividend payment to your account. Payment dates that you need to understand, or dates that you need to understand when you are a dividend investor. So there is what we call ex-dividend date. So this date, if an investor buy shares on this date or after this date, this investor is not entitled to get the upcoming dividend payment, because this transaction take time, so it need to like to be recorded and before you get dividend payment. So the best way for you to get that upcoming dividend, buy your shares some week before the record date, and then when you get on, when you record, now you can be eligible to get that dividend. If you buy shares on record date, you're not eligible for the upcoming dividend, because like you have already missed the record date, so you are not on the system yet. So you have to buy your shares some week before the record date. And then the payment date is that date that you now receive your dividend. If it's every month, and then you know when. And then if it's quarterly, you know when that date is. Dividend per share is that amount that you get for owning a share of a company. So for TD, they have 79 cents. And if you have now 100 shares, you have 79 cents times 100, which give you $79. Annually, the amount would be 316. But how do you get like dividend per share when you're on the TD chart on the broker's account? I was already logged in, so here you will come down here and you will see where you can get dividend. Maybe we can zoom in a bit. So if you zoom in, you will see here there's 79 cents. So this 79 cents is the dividend per share for TD. So the 79 cents is the dividend per share for TD. And now you have here the X date, which is X dividend date. So if you buy share on this date or after this date, you are not eligible for the upcoming dividend payment. And then here you have a current price for TD. This is the amount. If you have to buy the TD shares today, it will cost you $79. So that's it. So we already saw how to get dividend per share on the chart, and how to see where where is the ex-dividend date. So now let's continue with our slides. So let's look at dividend yield. So we have dividend yield. And why is it important? Dividend yield, you get the annual dividend per share divided by the current price. Times 100. So you need to know like the percentage return on your investment. So here you get 79 cents times 4, which is 4 quarters, divided by 75.42. This is off a bit because this slide was prepared a day before. So this is the current price, the one that is the denominator is the current price, and dividend per share is 79, but you're looking for the annual dividend per share. It means you have to multiply by 4, divide by 79 times 100. So the dividend yield that you get for TD is 4.18%, which is very good. So dividend per share, the reason why you will want to know dividend yield, not dividend per share, dividend yield. So it's for you to see if this company can sustain their dividend. So if this amount is in between 2% and 6%, and then it is good. But if it's beyond 12%, 15%, it means like this company is paying most of their income back to the investors, and they might miss in reinvesting some of the money back to their company and grow and sustain themselves. So it's good for you to look at the dividend yield that is in between 6% and below. Anything beyond that will let you know that this company is not going to sustain the dividend, and they might come back and say like, no, we cannot afford paying you dividend, and they can cut it off. Dividend are not guaranteed. So it's like the decision of the company whether if they will continue paying you dividend or they cut it. So if they entice you at the beginning with that high dividend yield, and then you get in, and then later on come back and tell you they cannot pay dividend, you might be like logged in there. Maybe you bought it at higher price and now the price is down and you are not getting dividend. So you need to be careful when you're selecting dividend stocks. So have to look at the dividend yield and look at the one that is in between 6%. So that's about dividend yield. What do you do with your dividend? Once you get paid with your dividend, others will reinvest it back to the company and have that exponential growth every year. So the more they get dividend paid, they get that is automatically reinvested back to their investment. And then others get cash and they go out to pay their bill, pay their groceries, and do some other things. What companies pay dividends? There are companies that do not pay dividends. Those are like tech companies. These companies, they promise that they will reinvest the money on behalf of the investors and they will give them back higher return. Small companies, startup companies, they do not pay dividends. Sometimes they just get the money and reinvest it back so they can grow and be bigger. But there are some companies like who are in the telecommunication industries, like tellers, they do pay dividend. And talking about Rogers also do pay dividend. And then we go to financial sector. So most financial sectors do pay dividend. We can talk about Manulife, we can talk about Sun Life, we can talk about all the banks like CIBC, TD, and RBC. All those ones do pay dividend. It's only like it varies, the percentage of dividend that they pay varies from company to a company. Oh, utilities companies pay dividend. Energy companies like Enbridge pay dividend, and a lot of them, like even health industry too, still have companies that do pay dividend. So it's up to you to make your research and see which one you want to invest in. Dividend is not guaranteed, and some companies, when they are experiencing growth in their business, they will decide to increase dividend. Others, when they see like the condition of their business is not conducive, and then they will reduce the dividend. Others will completely cut the dividend off, and you just have to decide what to do with your shares. So it's not guaranteed. And I think that's the end of the video. And thank you for watching, and please subscribe. Do not forget to subscribe. I appreciate your support, and see you next time.